Hi, this is Mike Lindbeck with Remax Commercial, bringing you today's SoCal multifamily sales pulse. Today's sales pulse, I wanted to go over a couple of recent charts that I found that I think are pretty indicative of what's going on in today's real estate market. They're explaining quite a bit of what's happening as far as the sales go, and then there's also having to do with the credit card debt versus the savings that we're experiencing nationwide and the relative amounts of each one of those. So let's get started on it. Okay, on the first chart here, we're looking at the U.S. personal savings near historical bottom. And right now in 2020, we had a 33.8% of savings during the COVID pandemic, and it has dropped down to in October of 2022 at 3.1%. So a real big drop there, about 35 points, 30 percentage points lower than what it was during the pandemic. And we look up here, it was about a 25% rate in 2021. And that versus credit card debt was at a low point in the fourth quarter of 2021, but now it has shot up to $926.2 billion in October of 2022. And I have a feeling that that's probably much higher than that currently, but this is the most current information that we have, and that's in billions of dollars. So the dramatic increase over the last, let's say 1.5 years, from at its low point at about 5 billion down here in 2021, all the way up to, I'm sorry, this was at about 750 billion. Now it's at $926.2 billion. So a real significant increase over that period of time, just shooting up from the low point all the way up there. So everybody has been using their credit cards to subsidize any debt that they might have to pay, and they're using that to pay their monthly expenses. The second chart here is the U.S. existing home sales decrease by 1.47% month over month, and that's the largest ever annual drop. As you can see here, it came down quite significantly, and this is over the in 2022, and 33.99% overall year over year. So a real significant decrease in home sales, largest ever, and that is of course translated over to multifamily, and that of course is also because of the interest rate increases that we've had recently. Quite a bit of a run up over a short period of time, the fastest ever. So that's going to put really deflate the housing market. As we've seen, sales have dropped off considerably, probably less than 50% of what they were at their peak, and a lot going on as far as future interest rate increases. We just saw an article the other day. We're going to see two at least quarter point increases coming in end of February, or beginning of February, and end of January is when the Fed meeting starts. The February 1st is when they'll announce their newest increase. And then after that, we're expecting at least one more, and then potentially they'll stay pat or stand pat at that point, and kind of look and see what's happening with the overall economy and what they have to do as far as further adjustments. So those are the two key stats that I was able to find, and I think that are pretty significant to take a look at as far as what our future, what the future brings and what potentially can happen with our economy. If you have any questions on any of this information or would like further information on it, feel free to give me a call. I'd be happy to get on the phone with you. Any questions on real estate, any needs that you might have, reach out to me at any time, and I'll be able to try and help you as best I can. Thanks, and have a wonderful day.